You are listening to Let the Money Talk podcast, a podcast where our PhillipCapital's experts deconstruct world-class tactics, tools, and routines for managing your finances. I'm Rashawn, your host for Money Never Sleeps. Stay tuned for our experts' top tips. Good afternoon. I'm Rashawn Gidwani, and welcome to Money Never Sleeps. It's good to have you all with us. I'm PhillipCapital's media host and presenter, and today we have a very special guest who goes by the name of Alvin Tan. Alvin, take it away.
Hello, everyone. I'm Alvin Tan, Financial Services Director at PhillipCapital. Before I begin, my sharing is purely my personal opinion and should not be construed as professional financial consultation advice. First and foremost, Happy New Year to everyone out there. 恭喜发财，万事如意. In today's Chinese New Year special, I'm going to talk about how to invest like a tiger this Chinese New Year.
Awesome. Sounds good. So tell us, Alvin, what made you choose this title?
Well, 2021 has been a smooth year for investments until the last month, and the downslide looks likely to continue into the first few months of 2022. In conjunction with Chinese New Year, I feel that it is a perfect time to share a simple Tiger framework for 2022 to help investors navigate the market and guide them for their investments this year.
Interesting. I personally have never heard of the Tiger framework. Would you care to elaborate more?
Of course. Basically, Tiger is an acronym for Trend, Interest Rates, Growth, Error, and Review.
Oh, wow. That's a whole lot to dissect. Let's take our podcast listeners through it all one by one, shall we? Let's start with T. T is for trend, you said?
Yes, that's right. T basically means trend. Many investors will have heard of phrases such as trend is your friend or follow the trend, and I couldn't agree more. Always invest in the market when the trend is in your favor.
All right. So how do I know what the current trend is?
Well, the answer's simpler than you may think. For example, when you look at the Standard & Poor's S&P index over the past 2 years, you'll find that the trend is moving up steadily. If you invest early during the uptrend, you will enjoy the capital appreciation over the full period. Let's look at the flip side instead. If you were to look at the trend of Alibaba over the past 1 year, it is in a downtrend. If you jump in during the downtrend, you'll find that the trend is not really your friend at all. This is because you're going against the tide. Before entering, do check the overall trend for what you plan to invest in. Remember, there are only uptrends, downtrends, and sideways trends.
Very insightful. Thanks, Alvin. Should we go on to the second point? What is I?
I is for interest rates. Interest rates have caused major jitters in the stock market since last year, especially when we face increasingly high inflation rates. So how do we use interest rates in our favor? Everyone has been talking about the potential interest rate hikes the Fed might be implementing this year. The major key point here is, how much will they be increasing the interest rates? At the point of this podcast, the consensus is we are looking at 5 to 7 rate hikes. So if everything goes according to plan on the Fed's end, there should not be any knee-jerk response when they do raise the rates. Be careful, however, if they do signal for additional rate hikes, this will cause the market to revalue itself again.
Thanks for the heads up on that. I'm sure our listeners will be on the lookout for that. Let's move on to G for growth. So what do you mean by growth?
As investors, we must know what type of companies we are investing in. Are they high growth companies? Are they stable growth traditional companies? If you are investing in technology companies, you must be careful with point number 2, which is interest rates. Interest rates have an inverse relationship with growth rates. Any increase in interest rates might have an impact on the share price of technology shares. Take the recent month's performance as an example. Any talk on increase in interest rates coupled with a lowered revision in future growth, will cause the shares to drop drastically. So based on the high growth expectations that we expect of the technology counters in recent years, we would certainly need to be careful when investing in technology counters this year.
That sounds like quite a challenge to navigate. Would the next point help us in the year of the tiger?
Yes, I believe point 4, E for error, will certainly help investors tide through this year. However, this point is also one of the major reasons why investors suffer big losses. The failure to admit one error in analysis might be the Achilles heel of many. They might feel on par with professional fund managers when they do buy a share, then proceeding to hold the share, believing that their decisions are correct. For example, many people bought Alibaba when it was way above $250 just a year ago. They did not feel the need to invest through fund managers as they were buying exactly the same share as bought by a fund manager. A year later, these clients are still holding the stock, which has unfortunately halved in value. To summarize, point 4, E for errors. When you invest, always keep an open mind. That is, it is human nature to make mistakes. If the share price moves in the opposite direction, do keep an open mind, admit the error, and cut loss.
Very well said. I do make mistakes here and there, but we are only human. It's totally fine to fall and pick ourselves up. Okay, let's work on the last point. What does the R stand for?
Sure, of course. The point is R, which represents review. 2022 looks like a relatively choppy year for the stock market. We had one of the longest bull runs in history. Is it going to continue? No one knows for sure. So be sure to review your portfolio periodically this year. My final tip to everyone listening, if I may, is to review your portfolio, get rid of what doesn't work, and move them to what works. With that, I've come to the end of my sharing for this podcast. I hope that my sharing of how to invest like a tiger this Chinese New Year has helped you in one way or another. Wishing all a prosperous and roaring Lunar New Year. Voila!
Awesome. Thank you so much, Alvin. You can visit our Taiseng Phillip Investor Center Lite if you have inquiries and connect with Alvin. Stay tuned to our next episode, which will be released soon. Also, tune in weekdays at 10 a.m. on PhillipCapital's YouTube and Facebook page for Singapore's most up-to-date financial news, the Daily Morning Note, hosted by me, Rashan Gidwani. Thanks, everyone. See ya.
Thank you very much for listening. If you enjoyed this podcast, please forward it to others, share it on social media, and leave a review. Follow this channel for other podcasts.